So are energy stocks going to be the next to crack? Let's bring in Stan Majcher, Hotchkis and Wiley's mid-cap fund portfolio manager. Stan, it is great to see you again, but it is a very different landscape than it was a couple of months ago. What happened?
You know, I think if you look at the short term, there's been a number of things that have kept oil prices down. In general, weak economy. Strategic Petroleum Reserve has added hundreds of millions of barrels onto the market. So I think it's temporarily hidden some of the issues that are in the energy market. And by issues, I mean long-term supply-demand imbalances.
Yeah, it's fascinating, and I was writing about it this morning, but to look back at what the oil bears like Ed Morse over at Citi were saying earlier this year, he correctly predicted that we would have excess inventories right now, the opposite problem of what we thought would happen. How do we get into this situation?
So I think, economic weakness, Strategic Petroleum Reserve, I think in general, people thought Russia production would come off. It has yet to come off, and we've added that extra supply from Strategic Petroleum Reserves to offset that, and it has yet to happen. So I think what we've seen is temporarily prices have been suppressed. The big issue in the oil market is that the world is just not spending enough money for long-term demand. So demand is suppressed. It's 100-ish million barrels a day. That's similar to where it was in 2019. But the potential is that the world will demand 103, 104, 105 million barrels a day. And the issue is it is very difficult to see how we'll supply that.
Yeah.
You mentioned Exxon. They came out with their capital expenditures. Chevron did the other day. These are companies that are spending, in the case of Exxon, $25 billion next year, roughly. Chevron is somewhere around 15-ish billion. Those companies used to spend in 2013, 2014 in a smaller market over $30 billion a year. So the spending is just not back to sustain a larger demand growth market. And that's the issue that the oil market is going to run into when we run out of these short-term factors suppressing demand.
And even a guy like Ed acknowledges that as we move throughout the decade with the energy transition and the rest of it, political pressures, that we could see more structural upward price pressure on oil. So what would you say?
It's hard to see how it doesn't happen.
Yeah. And can investors then be comfortable with this as an asset class for the longer term, even if they feel kind of bruised by the recent price collapse?
Absolutely. If you look at the valuations of the stocks, these companies trade at 10 to 20% free cash flow yield. So think of that as 5 to 10 times earnings. They're taking that free cash flow and buying back stock. So those earnings, that free cash flow per share, is growing very rapidly. And that's why we've seen stocks up 40 to 50%, even though the oil market, as you mentioned, is slightly down.
What are your favorite names in the space? Have they remained consistent, or would you now start to look at different parts of the sector?
They're consistent. We focus on kind of that small to mid cap E&P company that's taking that free cash flow, buying back stock, maintaining capital discipline. So it's similar to what we've owned for the last few years. Final
question. Should we be then using these low oil prices, if you think they're temporary and kind of suppressed, then is now the right time to try to fill up the SPR or make other strategic moves that we could to capitalize on where prices are, just for the moment? Yeah, the world is very exposed to risks. So we've released emergency stockpiles without a real emergency. Companies are not spending enough money. We're exposed to any issues, whether it's Middle East production, Russian production coming off, Chinese demand coming back on. That's the issue. So anything we can do to prevent that. The real issue is you have to give confidence to companies to spend for projects that will come on 5, 10, 15 years from now. And they really don't have that. So that's where this situation in the long run gets pretty dire.